Welcome to the IRS Whisperer podcast. This podcast is designed for tax professionals with a spin toward IRS representation. My name is Dan Hem, and I'm a CPA CTR. New episodes will drop weekly on Thursdays. Each week we'll be giving you exciting material to help the tax pro in their tax practice. That's assuming you can say exciting and taxes in the same sentence. On the IRS Whisperer podcast, each episode will cover 3 different areas of a tax practice. We will present the marketing moment, which will cover various topics in marketing or sales to help you generate more clients and revenue in your business. The world of practice management will give you suggestions on how to better run your tax practice. We will also cover our technical time that will cover some of the latest changes or tips, tricks to help you in handling your IRS representation case. So I'm so glad you are here and hope you enjoy the show. Now, on to today's episode. Welcome to the show today. Today's a topic I'd like to talk about. I've had a few of our members in the Tax Resolution Academy bring this to me. They've had a couple of situations where they've had clients say, hey, you didn't tell me this, or you didn't point this out to them. And, like, for example, I had one where they said, well, you didn't tell me I should be making payments. They were going to be in a payment plan. They're going to be able to pay in full. And might as well have them start making payments, getting used to the payment. Plus, my opinion is if the client is making payments, then the IRS is less likely to do any other bad juju things like levying bank accounts, garnishing wages, doing anything else of that nature. So the way to do this to avoid this type of situation is always reduce it to writing. Anything where you've had this discussion, where they need to make a decision, where you need to communicate that you've told them to do something, it's always best to do it in writing. At a minimum, that means you send them an email. So you've had a phone call with them, you send them an email, and in that email, you basically what's called reduce to writing everything that you the main points that you've discussed. Now, if you record yourself, that might be another way to do it. Now, not necessarily recording the full conversation. Record yourself. Have a recorder on the other end where you're recording what you're saying. You can have that transcribed, put it into, say, even a chat GPT that maybe help, formulate it into a better email. Then slap that together in the email, review it, obviously adjust and edit. If you use anything with the AI, you've always got to edit it because it's actually pretty good. I'd say mostly 80-90% of the way there, but sometimes it's going to say things a little differently. Sometimes it's going to hallucinate and put something in there that really shouldn't or doesn't belong. So make sure you edit that, but then edit that into your email, and then that will give you the opportunity to reduce it to writing. Now, you must also be specific. I always say you got to do things to take the idiot out of it. You've got to be very specific and say, here's the situation. Here's what we talked about. Here's the decisions that you need to make. You're going to do option A or option B, or here's the things that we discussed. I explained to you that you need to do by X date or whatever. Make sure you're spelling any of those out, that especially if there's due dates involved, whether it's due dates, getting something to a revenue officer, a revenue agent, a deadline for a tax return, a deadline for you internally to get something done so that you can review it, edit it, adjust it, whatever that needs to be done. And make sure that you do that. And then at the end, make sure that you ask them to reply to you that they acknowledge that you've provided that information. Now, if you really want to be a better legal protection, then you also, in addition to, send a letter, and send that letter certified mail, regular mail and certified mail. That's what you do. You send those letters, and then even if they don't claim and pick up the certified mail, they've gotten the other mail, and when that letter comes back to you, you just keep that. I keep them. I don't even open them, and I store and file them away, because if somebody comes and says, hey, no, you didn't, I don't open them. So don't open those envelopes. I just, I want to make sure that it's not doctored anyway. It's still sealed. Sometimes we tape them when we mail them so that they don't come open. The certified mail is still, the little stub is still taped to the front of it. And I keep that. Now, obviously, if they accepted it, then they've gotten that, and you still ask for acknowledgement. Now, that acknowledgement, say, hey, send me an email that lets, or send a return letter, or have a duplicate copy of the letter that they sign and date to acknowledge that you are doing something. Now, where would you use this? So, for example, that one member, because they said you didn't tell me I needed to make payments while you're waiting to get tax returns done, while you're waiting to, in appeals, while you're waiting to get the 433s done, any or all of those things that are in process. And for certain there's no way that they're going to qualify for anything other than eventually a full payment over time. Might as well just have them start making that payment. So you tell them to make X dollar of a payment, make one today, then make one every 30 days from there. And if you can get them to do that, then that would be great. So that would be one example. Another example, you get somebody into a currently non-collectible status. Well, currently non-collectible status, one, they will more than likely have a lien filed. Two, the IRS is going to keep refunds. Three, they're going to sit there until something changes. And so you let them know that if there's a change in their income, they win the lottery, they get a huge bonus, they get a big pay raise, they get a new job, they get married and they have an additional income source there. Any or all of those things could cause them to drop out of currently non-collectible status. And if you can let them know all of this stuff in advance and have that all prepared for them, and that they signed and that you explained that to them, if you have that in your possession, then they can't point the finger and said you didn't, because when they come back to you 2 years from now after they've dropped out of current non-collectible status, then you're going to have to tell them, well, unfortunately, we have to do the home 433 all over again with the assumption that you qualify. It's as if we never did it the first time, because now it's all based on current information, and that current information could be very similar or the same, but obviously there's going to be some things different. 2 years, a lot of things can happen to somebody in their tax situation, their financial situation. So make sure that you are doing what you can to document that stuff. Get somebody into an offer and compromise. You get them into offer and a compromise. There's what I call the rules of the road. You need to make sure that those rules of the road, you go through them line by line, especially the one that says, hey, you must file timely for the next 5 years. You must pay your 100% of your taxes for the next 5 years. You can't owe a dime of money. Otherwise that debt's going to come screaming back. That they won't remove the lien until you've made your payment for the offer amount. So all of these different things and all the rest of the rules of the road, because remember, an offer and compromise is a federal it's a contract with the federal government. So they need to make sure that that's documented properly, that you've explained everything, because wounded animals bite. People have selective memory. And if you ended up ever having, they decide that they want to sue you, and, we have a sue happy world, and they want to take you to court for it and say malpractice, then the best documentation you're going to have is something in writing, even if it's a conversation that you had either verbally in a virtual conference, in a face-to-face conference, it's a phone conference. Document that information to an email, to a letter, or both. That's generally the best way to do it. I wouldn't do a text message, although, as long as you can make sure a way to keep that text message and that you can save that with the information to show when and all that kind of stuff. And that's beyond my technical capabilities in terms of that. That's why I would prefer to do it either via email and ask for an email response, and getting a letter and a letter response. And even better, if you can get them to actually sign and date something that they acknowledge. And if it's husband and wife, get them both to sign, because then one of them says, well, no, you didn't tell us. And then, the husband signed and she didn't sign. And, now she's got some other beef about it. So do what you can to make sure you document that to protect yourself. At the end of the day, you're protecting both you and the client. They don't understand. They don't appreciate it as much as you will by making sure to document it. I know it's an extra step, it's extra work, but if you do some things to help remove some of the extra work to you, like I said, recording yourself on your end, so you're only recording your piece of the conversation, then you don't have to worry about getting the proper approvals. Now, if you are recording them with them on speakerphone, or if you're recording it on the phone itself, if your system allows for that, then you have to get their permission in order to do so, and make sure that, depending on the state that you're in, make sure you follow the rules. Most of the time, if you just have some disclaimer that says that you're recording the conversation, you're recording it for quality purposes or for documentation purposes, then you got to make sure that they agreed to it before you actually push the record button in that situation. But if you're just recording, you're holding the phone and you're just recording your end of the conversation, then it's easy for you to take that audio, to transcribe it, and then use it as, anything you can do to help make things easier for you, because then you know what you said, because, as I find as we get older, that the memory isn't always as it used to be, and it's hard to remember everything that you said. Sometimes you question yourself when the client says that, but sometimes when you know with 100% certainty that you said it, make sure you communicate that. Now, one other topic that I wanted to kind of cover is getting paid. It's very important that you get paid, because we take a lot of time to do things, whether it's handling a representation case, so an exam, a collections case, if you're preparing a tax return, bookkeeping, payroll, any of the not normal types of things. You do tax planning, you do CFO support services, you do any other types of consulting, evaluation type services, that any of those things are going to take time. Now, you should get in the habit. The first number one thing, obviously, engagement letters. I mentioned that a few weeks ago when I was talking about another topic, generally about raising fees and talking about, having that engagement letter and spelling those things out. But the second thing that you should have is that you should require a retainer upfront. My suggestion is a minimum of no less than 50% of whatever it is that you're doing. Now, 50% is usually what I require in terms of the preparation side of your business. So if you're charging $500 for a return, you get $250 up front. Why? Well, because they got some skin in the game. Have you ever had that client that came to you, said, hey, they want you to prepare the return? You go through all the moves, steps, and processes, and apparently there was some misunderstanding, and you got through the whole preparation of the return, and they said, oh, no, I decided I didn't want to use you, and I want to go to somebody else. Well, you just wasted all of that time. And the chances of you now collecting money from them are probably going to be a very minute ability for you to get that money from them. And I've had that happen many times. So that's why I went to starting with a 50% retainer on collecting from new clients. And then a number of years later, I said, why don't I do this for everybody? So I started doing that for everybody. And I told my staff, I said, basically, you ask, and then you let it go. Because generally the ones, there would be a small handful of clients. And I'm talking about, out of like 500 clients, I had 5 that might have given some kind of grief, questioning issues about it. And, anywhere from, hey, Dan knows I'm good for it. Hey, Dan knows me. Or why do I have to do that? And, you're going to get that. And just if you have the gumption to do that, putting the skin in the game, now you know that they've engaged you to start doing whatever the work is that you're doing. Now, having said that, my recommendation is that when it comes to representation work, so in the case of exam, you should probably get somewhere between $3,000 and $5,000 up front as a retainer before you start anything with an exam. And then from there on, then you charge a hourly rate from that. Now, on a collections case, we generally say that you should do it sort of a value-based flat fee type of situation. And in a collections case, I always try to get 100% of my money up front. Now, I usually will do in a 2-step, what we call the step type of sales process. And so I will do the investigation of liability phase, where I will charge a fee for that, which usually includes transcript analysis and some financial analysis, even if it's preliminary financial analysis, to see what resolution option they qualify for. And then once we've made that determination, they've agreed that they want to go whatever route is: partial pay, installment, regular full pay installment agreement, or maybe even a full pay, currently non-collectible offer and compromise. Maybe I only need to go to appeals because they've already handled everything before, penalty abatement, whatever the situation is. Then I will charge a separate fee. Again, I collect 100% of that before I start doing the work. And you should have in your engagement letters that once the information is received, once the money is received, it is considered earned when it's received. Now, obviously, if any time goes on, just do what you can to try and document that you've spent time on the work that you've done. Because if you've given if they've given you a big retainer and then they question something, or you come back and say, hey, it's going to cost a lot more, and that's not something that they want to do, then expect that, and they do that in a short time frame, then chances of you being able to earn 100% of that, and they're going to whine and complain, and you're better off just giving some portion of a refund back, as opposed to trying to do anything else. Because if you don't, then they're more likely to sue you and obviously get some kind of waiver signed that, that they agreed to this refund, and that they're not going to pursue any other legal action. You may want to talk to an attorney in your state to see what your limits are, because obviously with the various states that we have and the rules and regulation, is going to be different all in the various states. But make sure you get paid, because otherwise, and I'm sure many of you have had that type of a situation where you've done the work and then all of a sudden they just like, oh, no, I didn't mean to hire you. I was joking, that kind of situation. Or the couple that came and sat with me, gave me all of their information, left it with me, and then they came back to me and said, oh no, we decided we wanted to go elsewhere, or you go through all of that work and they don't like the result that you gave them. Well, you still spent time. That's still worth something. And if you didn't charge them anything up front, then you're out of luck. I mean, trying to get money subsequent to is going to be nearly impossible to do. At least if you've gotten some money up front, then if they don't pay the other half, you were, at least you've cut your losses into some degree in that situation. But remember that you have an opportunity cost, and if you spend that opportunity with your time on one project, and then it turns out you don't get paid for it, well, you lost that opportunity of something that you could have worked on, something else that you were going to get money, that you knew had a better chance of getting money. So make sure you look at that and look at it very closely. Pay attention to these things. Make sure you train your staff to be firm but not forceful, is basically what I say. Make sure, because you obviously don't want to hurt feelings if you can avoid it. But, make sure you're running a business just like any other business. You deserve to be paid for everything that you're doing, and you should be paid accordingly. And whether you're an EA, a CPA, or an attorney listening to this, you should be charging, most of you probably should still be charging more than what you're worth. I was on a webinar recently, and the question was asked, what do you charge for various services? And I literally heard from anywhere from $200 to about $750 for a Form 1040. And, that it hurts my heart when I hear somebody's charging under $500. Most of you should all be charging more than that. The country average is more than that, from that standpoint. And if you're in a jurisdiction where you're in California, and if you're in New York or Hawaii, where the cost of living, standard of living is much higher, you should be charging above the averages. And, there's somebody's going to come back and say, but yeah, well, I like to do lower income people. And yes, they need tax preparers too. But if you're charging $200, these people can also, they have no problems going to the likes of the big box stores. We all know those stores, and, there's one on practically every other corner, and those people charge $300 plus for returns. And so if you're charging under them, then you're not charging enough. The time that you take to get your license, the time that you take for the continuing education to get to the point where you are today, and all the requirements, all the materials that we have to buy, all the software we have to buy, the people you have, all of them want raises every year. You have to increase your fees, which is a whole nother thing, and talked about that a few weeks ago. But I just kind of wanted to reiterate that to you, and hopefully everybody gets what I'm saying. And I genuinely mean that, because if you can learn to charge better, if you learn to collect the money, get paid, like I said earlier, then not only does it help your cash flow, but it helps you manage projects better. It makes you know and have a better understanding of what you're actually going to get paid on. So with that, I hope that you take this to heart, and until next week, have a great day. Thank you for listening to our show. We hope you received some valuable information to help you in your tax practice. The IRS Whisperer is sponsored by the Tax Resolution Academy. If you have any questions you'd like to see addressed on the show, or comments to help us make it better, please reach out to us on social media. Follow us or download our shows on your favorite podcast app. Tune in to our next episode, where we'll give you some more exciting information to help you grow your practice.